I've told you many times to stay away from Chinese stocks. For now, I've been right. Chinese stocks are performing poorly, to say the least. But today I'm gonna give you an alternative view, an alternative way to invest in Chinese stocks. So stay with me if you're interested. And of course, please remember to subscribe to my YouTube channel if you're new and leave a like to this video. The Chinese government is stimulating the economy, and some are speculating on the fact that in 2025 Xi Jinping is gonna push harder, he's gonna stimulate the economy even more. So many value investors are interested in investing in Chinese stocks. But I think there is a better and less risky way to make money off Chinese stimulus measures. So let's try to understand what's going to happen when Xi Jinping is gonna stimulate the economy. He's already doing it, but for now we haven't seen much of an effect. But what's going to happen is that the wealth effect is gonna have a positive effect on consumers, on people, and mostly on the middle class. Probably middle class is gonna make more money. There is going to be some inflation, which is going to rise salaries. Probably interest rates are coming down, so people is going to be able to borrow at better rates. Therefore, entrepreneurs are going to make more money. And they're going to have some stronger consumers, which are going to be more prone to spending. Therefore, the economy is going to get better and people is going to make more money and get richer. The middle class is going to become stronger. What does a Chinese middle class man or woman want to do when its economic situation improves? They want to show it to the world. They want to show other people that they make money. Therefore, they're going to buy luxury products. In China, in Japan, in many Asian countries, luxury is a way to show your economic class, is a way to show that you make money, that you're better than other people. Therefore, luxury products and mostly luxury fashion products are very popular in China and in Japan. Indeed, the biggest luxury companies make around 40% of their revenues in China. Therefore, this is my idea. Probably the best way to invest in China is buying luxury stocks. For example, Kering and Louis Vuitton, LVMH, would be the best ways. One, Kering is very undervalued. Gucci is having a hard time, but probably there is going to be a turnaround. Gucci did it a lot of times in the past and they are very likely gonna do it again. It's gonna take some time, it's not gonna be a steady improvement. There are going to be hard times, but probably things are going to get better. Therefore, Kering stock could improve a lot in the next 5 years, while Louis Vuitton, LVMH, is already the number one player. They are the best. They are doing the best job in the business. Therefore, they can probably profit from these stimulus measures which are coming in China. I think this is going to be a better way to invest in Chinese stocks because, as we all know, investing in Chinese stocks is going to be extremely dangerous. In the past 10 years, the performance has been poor, it's been horrible, it's been really bad. And investing in single stocks is going to be too risky in my opinion because you can't really trust Chinese companies' financial statements. Chinese stocks are ADRs and they are basically just paper sheets which can be taken from you at any time if the Chinese government decides so. Therefore, investing in luxury stocks could be a better way to play stimulus measures in China. Let me know what you think about it, please. Type a comment and remember to subscribe to my YouTube channel if you're new. And leave a like, of course. That's it for today, so see you next time. Bye!